Hello, Fort McMurray. Welcome to this episode of Let's Talk Lending. We have something to talk about. Why are we here? We are here. I'm here with my lovely co-host, Barb Pinsent. Say hello.
Hi, everyone.
All right. Everybody's on bated breath on what's happening with the Bank of Canada rate, and we had a rate announcement today.
We did, and it was a big one. They're
It is a big
not
one.
letting up. They say that they don't want inflation to become entrenched. So they feel, and I guess they know what they're doing. I have to think they know what they're doing, that raising rates is a way to stop that from happening. And that they're going to do what they need to do to get inflation back. And they do want, it at that 2% level. And it is 7.6 right now, so it's
It's
not.
7 points. It is, but it is down. I mean,
It's
that's the
down.
one piece of good news, right? It is down, which is great, but it's not down enough. And that's
Mm,
the problem. And
that's right.
so the government's wisdom with all of this is that, okay, we're going to drop it. We're going to try to get that inflation rate down, get it down, get it down. But there's going to be an impact. There's going to be an impact on auto sales. There's going to be an impact on buying power of buyers. But like, listen, Barb, let's get right into your presentation here, okay? And
Sure.
okay, a year later is what it
Yeah.
says.
And that's what I thought we'd talk about, is just where things are now as in comparison to where they were a year ago, and just a
Right.
little bit about how rates are set. So, you hear about rates going up because that's what you and I have been talking about each time we meet. It's that variable rate, so the overnight lending rate. Fixed rates have actually been coming down a little bit, although today I got a rate update again from a lender, and their fixed rates are going up, but because they were a little more aggressive than some of the other lenders anyways. So, there are other lenders whose rates are a tad bit better than theirs were anyways. So,
Okay. Okay.
yeah.
All right.
And so fixed rates are tied to mortgage bonds, which is essentially a form of an investment, kind of like a stock.
Okay.
And get you to change it again. So
I got you.
when people are buying bonds, fixed rates tend to go down.
So I think that's something that people don't realize how these things get determined. So I'm glad we're going over this.
Yeah,
And if you
yeah.
have listen, if you have any, you're in the audience, you're watching live right now, you're on Facebook, tap into the chat, may ask questions, and we'll make sure we get your questions answered.
That's right. So when people are selling bonds, fixed rates tend to go down. For an example, when the pandemic started, people were selling their bonds like crazy, anticipating a housing crash, and we've anticipated those a number of times in my career. Fixed rates went up and up and up. Then the unexpected happened and the market didn't crash. It actually went crazy. People started reinvesting in bonds and fixed rates reached historic lows. So there's a lot of factors that come into, those fixed rates and how they're set, but that's an example of one of the ways that they are set. So we've seen fixed rates decrease slightly, but since the economy is so unpredictable right now, we don't know how long that's going to last.
Right. Okay.
Yeah. And variable rates are set by the Bank of Canada. So the Bank of Canada sets the overnight lending rate. Banks in turn charge their prime rates, and they're typically 2.2% higher than the overnight lending rate is. So the overnight lending rate is one figure and the bank's prime lending rate another. Typically, when the Bank of Canada increases the rate or decreases it, banks increase or decrease the same amount. Not always, but that's typically what happens. So right now, the bank's overnight lending rate is 3.25%, or the government's, sorry, and the banks are charging, or their rate will go up to 5.45%. So that's the prime lending rate right now. So quite a bit higher than it was, unfortunately. And this is just a sense of affordability now based on an annual income of $100,000. And I'm using a fixed rate to qualify incomes with. So before rates started going up as they have, on $100,000 a year, you'd qualify for a purchase of about $479, insured mortgage, minimum down payment. With rates being where they are right now, the house that you can afford the amount obviously has changed. We're looking
Right.
at about 423,000. And then you can see the difference in the payment amounts there too. So, on the 479, you were paying less than you're going to pay now on a $423,000 mortgage. And my bad, it's mortgage numbers that I have here. So that payment is based on a fixed rate. And yeah, so you
Okay.
can see there is a
There's a
substantial
difference.
difference. Yeah.
Yeah.
And for those who are in variable rate mortgages, some of those clients will now be paying more than the rate I used here for these numbers because prime has gone up once again. So, for those clients, it's a really, what do you do? And it's a balancing act. I think maybe, and you're like, I was holding, I was hanging on to my variable rate, still am. However, every time it goes up, that it's a concern because I know my payment is going to go up. The adjustable rate mortgages payments will always go up. So maybe, if we're being told it's going to happen again, so it might be wise to maybe look at shorter terms because there is always that possibility of the overnight lending rate coming down again. Don't see that happening anytime soon, but it can come back down. So, maybe don't lock into a 5-year rate, look at maybe shorter terms. And if that's something that you want to discuss with me, then give me a call and I'm happy to, to run some numbers for you to see, because we are where we are right now. Unfortunately, there's no going back to those lower rates because it's, you're going to lock into what is available right now. But
Right.
that is an option for someone in a variable rate, or stay the course and fingers crossed that, we will see prime come down again. And, the government has it's a fine line that they're walking really, because, do they want to put us into a full-fledged recession? I don't think so. And they seem to think, there's still room to increase rates and that not happen, but who knows? They were telling us not so long ago that they weren't going to increase rates until 2023. Well, here we are in 2022 and we've had 6 rate hikes. And substantial rate hikes. So
Right. I mean, we were starting at 0.25% and now we're at we're up 3 full percentage. There's 2 more rate hike announcements. These are date announcements. And we're expecting more increases. It's basically, it's
that's what they're telling us, right? Yeah. They've said as much. Yeah. And the only way that I guess that's going to stop is if they can get inflation down. And the only way that stops is if people stop spending money. So I guess we've got to stop spending money. The housing markets have slowed for sure. So it's having, its intended impact there. I don't know what the rest of things look like, but.
Okay. Well, here's what I want to show here. Okay. And can you see this? Okay. I'm hoping people can see this. So I updated some of this morning. Where we are inventory wise is, let's look at 376 because I actually didn't get a chance to update the entire thing. Our inventory is up. It's up from, please ignore this because it's not right. I didn't get a chance to finish it. I apologize. But, 376 single family homes for sale versus, 234 in April. That's a difference. So, those are some of the things that we're looking at. Yeah, ignore this number right here. But 42 sales, the month before was 45. The height of the market, we're less than half of the height of the market right now. So if we look at the average sale price of last month, it's 520 down from 552. It's only 40, it's still a low amount of sales. Our average sale price for the year at 550 is still higher than the average sale price of last year. So we're still doing okay in those regards, but we're going to see I'm seeing more price reductions. It is a buyer's market. You're going to have to, I keep talking about if you want to win a race, you got to be at the head of the pack in order to win the race because there's so much competition. So you got to be priced right. And that's something that I've been talking about for the last couple of months anyways to my sellers, to my buyers, there could be some opportunities, but the sky's not falling either. Right.
No,
so, it's just a matter. There's always going to be people moving to and from Fort McMurray. So you're either paying someone else's, you're either paying someone's mortgage or you're paying equity into your own future. So it's some of those ways to look at those things. And I predict that the rents are going to go up. Right. So as we see buyers get a little bit, possibly get a little bit more wait and see kind of attitude as all this happens, I think the landlords, we don't have rent control here. We're going to see landlords start to raise rents because they can. So, you just got to be smart and wise with all of this. Barb, do you have anything else you want to add here? What else do we want to, anything else?
Just if you're concerned and, want to have a conversation, want to run something by me, always here to help in any way that I can. So, I know these are, obviously there's cause for concern, especially for those who are in variable rate mortgages. So if that's something that you want to have a chat about, by all means, reach out.
Awesome. Okay. An easy way to get a hold of either of us is letstalklending.com. You can also find Barb and I on Facebook and on Instagram. We're pretty easy to get a hold of, and then messaging us is easy enough too. So, do us a favor, share this video, tag a friend. We don't want people to be afraid, but we want them to be aware of what's happening. The sky is not falling.
No,
you gotta
and
be smart.
we're spoiled because those rates were historic lows, right?
Yes.
They really were, and it doesn't take long to get used to a good thing, but it wasn't something that was going to hang around forever. So,
exactly. But it's going to take time for people to adjust to that.
Absolutely. Yeah, absolutely.
Right. And so as the price ranges, as the buying power decreases, so does the price range of what people can spend. Right. So, we just got to wait and see. So October 26th and December 7th are the next dates that Barb and I are going to get together. We're going to talk about this, and I'll keep reporting on what's happening with the statistics in the market as well. So, all right, Barb, thanks so much for your time. And as always, Fort McMurray, be well.
That's right. Take care.